Gold traders are laying low on day one of the FOMC meeting, and although most say rate hikes would be bad for gold, some analysts still believe that the best long-term move for the metal would be if the Fed raised rates. Joining us today from the CME is iiTrader's Bill Baruch. Bill, thanks so much for being with us.
Thanks for having me on again.
So, Bill, what do you think that the Fed should do? Do you think that they will raise rates come Thursday? And how could this impact gold?
You know, I do think the Fed should raise rates. The issue is they've been talking about it for over a year now, and really they need to remove that dark cloud of uncertainty. If they don't do it today, if they don't do it tomorrow, then really what we're going to see is being talked about again for the next several months, and then if they don't do it December again. So they need to remove that uncertainty, and really it'll bring a vote of confidence back into the market, or just really back into investors, and that's important to do right now. So I do think they should do it. I do think they will do some portion of a rate hike and just get it started.
Now, Bill, how are the technicals for gold? We saw a jump this Wednesday, but is it just short covering here ahead of the Fed decision?
Yeah, we've seen some short covering. Obviously, the shorts have been waiting for that move below 1100 to open the door for a failure and a lot lower price action. That hasn't happened. The low is around 1197. The market's been battling support, which is right at that psychological 1100 level. This morning, you know, it was able to get out and shorts ran for the hills. It really isn't that crazy of a move. What we've seen is just technical. Volatile swings. 1125 was the 382 retracement from the high we saw a couple weeks ago. So the market failed against there, bringing some tremendous trading opportunities, and it's settling right around 1119, which is the 50-day moving average. So yeah, it's seen some short covering, some jockeying for position, but really it's been giving traders some great opportunities here today to really get ahead, make some trades ahead of the FOMC meeting.
Right, and Bill, despite oil's bounce today, you know, commodities across the board have been in a slump. How much of this is bringing down gold?
You know, I do think that right now, I mean, the market is weighing, the outside markets are weighing on gold because it limits the ability for investors to put capital towards gold. We saw the run up in the wake of the equity market collapse, but really margins calls had really hindered the ability for it to get even to the 200-day moving average, which was at 1190 at the time. On top of that, though, it's this pending rate hike, and the reality is this rate hike, whether they did it now or whether they did it in Q1, has held back investors from investing in gold for the long term because of the uncertainty over when they're going to get this done. And really, if by doing this rate hike too, will take some and relieve some of that uncertainty in the long term for the fact that they've actually took that step and actually did it. And we think that's going to be a positive for gold.
And once we know the outcome of the meeting, do you think we'll continue to see volatility in the markets, or will we get some solace here?
You know, I think after the outcome, if they do hike rates, the market will take a slump, but it won't be very short. It won't be very long-lived. I think you're going to find some support. The value buyers have continued to come in, you know, around the 1100 area. I think we go below there, but there's going to be value long-term in this market. And I think it really depends on the message that the Fed delivers. Are they going to hike, and then do they really make the investors feel comfortable that they're not going to do it again in the very near term? That's what's going to be important. And if they don't hike, you know, then I do think gold will see a short-lived bounce. And that's going to be a great trading opportunity as well.
Bill, thanks so much for your thoughts today.
Thank you very much for having me.
And thank you for watching. We have David Morgan up next. Stay tuned.